Welcome everyone back and forth with Becker and Orr. Kevin and I are ready to go at a remote location on the road today, but still taking the time to have a little back and forth. Lots of topics to tackle, including September. We talked about seasonality. September's rocky. That's going to be our lead-off topic today. You want to stick around.
Yes, we are on location today, calling or filming to you live from the Fairmont Chateau Whistler. As you can see, I got beautiful trees in the background, and I'm just waiting to get out there and see what the rest of this place looks like. But yes, before we do that, we got to go with back and forth. Now, if you want to get more of these, please visit our website at beckerorr.com or like us on Facebook, or always visit our YouTube channel, subscribe, become a regular, and get all this information at all times. Clint, why don't we start off? We're talking September, last day today. What do we want to deal with on this point?
We got to start off with the predictive abilities here of Kevin Becker. One of our earlier videos, which we're going to link to. We'll throw the link up probably over there. We asked about September. You said September is going to be down. That was your prediction.
Yes.
We'll pull up the chart here. This looks at the TSX. That's the green line, the Canadian S&P TSX. You can see the Dow there in red, the S&P 500 in blue. This goes until yesterday, so not quite the full month of September. It doesn't include September 30th, but you can see the trend. All the major indexes, Canada, U.S., in negative territory there, Kevin, for the month of September. So what is your secret here? How did you hit the nail on the head with that call?
Well, it's like anything else. It's not panicking. As you can tell by the 15th, I was getting a little worried there. Things were still fairly flat, but I wasn't panicking. I knew that things would come in this way. No, as we've seen beforehand, we've had such a strong run. It's basically been almost last September since we've had any sort of a correction in a downward month. So sooner or later, we were probably going to get that. But we have a lot of things that have gone on in September as well. I mean, we're dealing with stuff in the U.S. on the Fed. We are dealing with things like the Evergrande scenario that's come up in China. So we've got a lot of things going on. Interest rates have become a topic. The Fed has become a topic. There's a variety of different things that have gone on that basically has moved the market slightly to the point of, well, is this all rosy anymore? And we're not really too sure. We're going to have to see how things go. But there's more than that, isn't there?
Oh, absolutely, absolutely. I mean, we have to keep it in context. We had a phenomenal run there, a month after month of growth without any kind of volatility. Really, it's been almost a year since we've seen volatility in the stock market, which is highly unusual. And even what we are seeing now, the market didn't drop 30%. We're talking at this point maybe 5-6% off the highs, so still well within a normal range in terms of turbulence. So in my opinion, not the end of the world. More, in our opinion, of a pullback as part of a larger trend than it is the start of a massive panic moment. So a pullback of a larger trend. Some people say we're due. You list all the factors there. You kind of combine those, and you had some reasons for people to be a little more cautious, a few reasons for people to sell, and essentially that's what ended up happening. Not a massive downturn, but you saw some of the froth come off the top there in the markets.
Yeah, and as we've mentioned, I mean, this is healthy. Markets need to have this. You can't just go on a straightward line up. You have to have a little bit of correction here and there and a little bit of volatility. It makes the market continue to go. But that's topic number one. Now we can move into topic number two. Hockey season is upon us. I am so excited. We are in training camps. We've had exhibition games, and it's the Jets' new season. Now, some of the points we can consider. Last year, okay, probably a bubble playoff team. Maybe we'll see where they go from there. But adding the additions we've had in the offseason, we now do become cup contenders as far as I'm concerned. Solid top 9. We've got a top 4 that's definitely there. Probably the greatest goaltender on the planet. I am all in this year. And if not, well, I'm not making that prediction just yet. We're going to have to wait a little further on. And I'm not betting the Vegas odds, but I do believe that we have some options in there. What do you think?
Yeah, for full disclosure there, Kevin is pretty much all in every Jets team. There's rarely a year where Kevin's not on the bandwagon. So you have to take some context here with these predictions when it comes to hockey. But I agree. We certainly have some promise, certainly a few reasons to be excited as we enter the regular season here for the Jets. But always bear in mind, potential doesn't always come in to phenomenal runs. I think there was a year, was it 2 years back, St. Louis, the worst team in the league, kind of the halfway point, and they go on to win the cup. So there's lots of factors that can play into a regular season. Lots of teams that may start off slow or start off strong and change midstream. So lots of potential reasons to be excited, but call me a pragmatist. I'm not quite there yet. I'm not at fever pitch here like Kevin is.
No, you're right. Injuries, a whole bunch of things can happen between the beginning of the season and the end of the season. On paper, we look great, but you're right. I mean, it's not all completely that way. So we'll see. I'm going to say yes. I'm all in, but I'm always all in. So that's not a surprise by any stretch there. All right, Clint, why don't you lead us through what the Fed's doing? What are they doing right now?
Yeah, I got to put my glasses on here. I'm older than I think, but I didn't want the reflection on the glasses. So I'll read it off here. This is from CNBC. You can see it on the screen there. It's a headline in reference to Jerome Powell, the head of the Federal Reserve in the U.S. He said the Fed Chair Powell calls inflation frustrating and sees it sticking around into next year. That encapsulates quite a bit when it comes to the central bank. There was actually a speech recently last week by Jerome Powell. They talked about quantitative easing, said they're going to start tapering. That's the term they use when they start taking the foot off the gas pedal when it comes to all the stimulus. And there's also lots of talk about interest rates. Now, they said they're going to leave them alone for a little while yet, but highly expected as we move into next year, maybe a little longer than that, depending, but rates will start to rise. And a key item here is what's mentioned in the headline. It's inflation. Prices are going up. And it's not as transitory as expected. You're on the same page here, or are you taking a different side?
No, I think that's exactly it. And I mean, the only thing that I'm a little leery on is, okay, how far does the fourth wave go? Is there a fifth wave in the U.S. because the vaccinations aren't there? Now, again, remember, Powell said that he's looking at tapering probably in November. This time last month, he was tapering into September, so that could get pushed back even further. As for that, they want the tapering done by the middle of next year. Then they're going to look at interest rates and things along those lines. So again, it'll all depend on how the numbers look coming forward. I mean, if we're getting not enough job growth, if the market's not moving far enough and things along those lines, if the economy is just not running, then they're probably going to hold off on this a little longer. But I do agree. I think that it is about time, the way things are going, that we are going to start to see the Fed do some of this. And again, you had an initial pop when it came around, but that didn't last too long. So, all right, I'm on the same page. Inflation is there. I mean, they can take out gasoline, they can take out food and a few other costs, but those are the basics that everybody uses anyway. So even if it's the CPI at 4, you're probably a little higher than that. And yeah, we do have to start figuring out how we're going to control that going forward. So that's definitely something to look at.
Just an explanation for the viewer. Kevin's really talking about core inflation, which is a statistic they measure both in Canada and the U.S. And they take out the volatile items, which essentially is food and gas. I'm not sure who doesn't drive a car or eat, but they take those out of their core measure of CPI, and it tends to be the one they use when they're talking about interest rates and benchmarking inflation. But even that one is going up, and that's the message here, is that even the core level has started to rise. Talk about travel, and this is very key. Because we just travel. We're in Whistler, as we mentioned, on the road for our conference. We can tell a little bit about our experience going through the airport, dealing with security, dealing with vaccination requirements, masking, all the different requirements. And I can say we went from Winnipeg to Vancouver and then drove up to Whistler. Winnipeg Airport, Vancouver Airport, certainly not a hub of activity, but a lot busier than I would have thought. It certainly is not a dead zone. There's people there, and the plane is predominantly full. Lots of activity. Shops are open. People are buying. It was busier than I thought. What were your cases here with the travel, Kevin?
Yeah, I mean, I was actually a little more surprised. I mean, I knew it would come back, and I knew people wanted to get out, but I didn't expect that it was going to be quite as robust as it really was. I mean, we're not talking a hub like it would have been this time last year, or should I say 2 years ago now, by the time we're doing this, but it's definitely more activity. People feel a little more comfortable. Now, there are masks everywhere while you're around inside the airport, or if you're going into the stores or anything like that, but you're right. I mean, basically no vaccine policy at this time. I mean, they check your the same sort of scenario for security, but I mean, security, we still had to wait 10, 15 minutes. So it's not like it's you just walk in, you go through there and you get into the airport. And you're right. I mean, moving from one place to another, still fairly simple, but I mean, we're starting to get back to some form of normality now. Whether or not that involves vaccine or passports or anything along those lines going forward, it's going to be hard to say, but you're right. I mean, the travel scenario is there. I think that sooner or later, you're going to have to get travel by a vehicle across the border one of these days, but otherwise air travel seems to be there, and it seems to be well looked after in some places. I mean, everybody on the plane seemed to be wearing a mask all day, so I think that worked really well. So yeah, I'm in your boat. Same thing. I think the travel was fine. Let's see how it is on our way home.
Yeah, and this isn't hard data. This is our experience that we're sharing here, and it was busier than we thought. And at the conference, we do have some folks that come from the U.S. To attend. So we had people from Boston, people from New York, and talking to them, there were more measures in terms of the negative tests they had to submit before they're allowed to cross the border, and negative tests they have to submit before they go back to the U.S., but still possible. So we are seeing a little more travel than expected. Perhaps it's a little highlight in terms of economic growth. We'll move here to the question of the week. I'll tee this up for you here, Kevin. It's been all over the news for a while now. We talked about stimulus, part of the stimulus package, central bank, then you got fiscal stimulus in the U.S. They have those two big packages, the infrastructure, the budget bill, trillions of dollars. Will the U.S. pass either of those big bills? What's your thought?
Well, I think that one will pass, and I do not believe both of them will. Again, I mean, today is basically the vote. I mean, I know Yellen was coming out. First, they're worrying about in the U.S., they want to make sure that they can cover the government so it doesn't shut down. They're pushing back the debt ceiling now. They'll probably December is what they want to look to do with it. But in regards to sort of the human resource and the infrastructure budget, we're going to find out about those. Nancy Pelosi was putting the infrastructure budget to the floor today. And as you've mentioned beforehand, you probably don't think that Nancy's going to put it there unless you can get the success going for it. And I happen to agree with that point. So I think that this bill may pass. We already know it has bipartisan support in the Senate. So if we can get past the progressives on the conservative side in the House, I think this one will do it. As for the more human resource or reconciliation one, I have a hard time buying that that's going to go. I think the more moderate Democrats are saying, no, you know what? $3.5 billion is far too much money. We're going to have to look at scaling that back a little bit, but they haven't given a number yet. So my view is yes to one, no to the other. What do you think?
Yeah, you're probably right. I mean, some numbers here. The infrastructure bill, $1 trillion. There are some bipartisan support. It's already passed the Senate. Likely it'll pass the House. That's my view. So $1 trillion of more traditional infrastructure, roads, bridges, that kind of stuff will likely get through. The $3.5 trillion, which kind of has all the Democratic goodies in that one, because it's not just traditional infrastructure, lots of other items. They've already run into some roadblocks pretty much across the board with Republicans, and they're running into roadblocks within their own parties, particularly with the moderate Democrats saying that's too much money to spend. I have a hard time seeing how they get that one through. But I don't know if they could really break them up, because there's kind of a deal to get everyone on board saying we'll do both. But I'm not sure if you'll actually see that come to fruition. But one for sure. Two, maybe. In terms of market reaction, I think that's fairly consensus. I think markets are expecting one to get through, not expecting 3.5 trillion. So if one of them does not, that 3.5 trillion does not get through, I don't think you'll see a lot of market reaction. I think that's already kind of baked into prices. So investors, in my view, not too much to worry about when it comes to that large spending bill. But we've already rambled for a while here. We'll leave it there. If you have more questions, if you want to suggest a question of the week, contact us. We're always open, chatwithclintonkevin.com. You can visit that website, simply fill in the form and let us know your question. Whatever the topic, we're always happy to help out. I'll leave it to you, Kevin. You can get the parting word this week.
Well, we would love to have you all here with us right now in beautiful Whistler, as you can see. Other than the fact that it looks really nice and sunny, it's not. It's still raining. It is BC. Let's remember that. So that doesn't change overnight. I'm going to go find a rain jacket. I'm going to walk down to the village now, have a little time and see what's going on there. But otherwise, I think we're good until the next time we do a new back and forth. I'm out.
Take care.